Friends, welcome to the Manthan series of BFM. In Manthan series, as you can see, we are covering all the objective questions, numericals, case studies, okay, of all the previous year repeated questions of all the subjects. I am covering BFM and ABM. Other mentors are covering other subjects as well. So follow the complete series. Like this video, share it with your friends, subscribe to the channel. JAIIB CAIIB English channel, subscribe to it. You are getting many free YT series, YouTube series on the same, various repeated questions, plus planners, how to plan for the studies, everything you are getting. And get this, and importantly, it's all free. So go for it. Today's topic is technology. Almost third last chapter in your second last chapter, in your this BFM module A. Then one more you have, that is gift city, that is remaining. This is technology. Technology means how the technology is changing the international banking. See, we are not focusing here on retail banking. We are focusing on international banking. I'll cover the technology part. Mainly I'll cover the blockchain part. Because blockchain is the technology which is changing the international trade finance. It is the thing which is very important. So I'll cover the blockchain part mainly because in given limited time we can cover that only. Plus I'll cover some other objective questions also. Okay. Technology in international banking. Look at this. This is a standard traditional format. Traditional format means what? What do you mean by this word traditional format? Traditional means what happens right now, presently what is happening. This is a LC transaction, letter of credit transaction. Importer is there, then exporter is there, importer's bank, exporter's bank. Importer will go to his bank and request for the LC. This bank will issue the LC, and how will this bank provide it to this exporter's bank? Through its agent. See this, LC issue, then LC notification means this is called as advising. See step number 1, I have rounded off everything. 1, first step is LC request, then LC issuance, and then LC confirmation. It is physical right now through SWIFT. This part is through SWIFT, this part is physical. Okay. Then second step is what? This exporter prepares the documents. Here I am going a bit fast in this because this process I have already explained earlier. LC process I have already covered earlier in the LC chapter. Okay. So this I won't be covering it again. Got it? So now look at the second step. Once the LC reaches this exporter, then the second step begins. This exporter will prepare the documents. He will submit it to his bank. His bank will submit it to the issuing bank. Okay. So this is called as the documents flow. These banks are called as negotiating bank, confirming banks. There are time delays in this. See, I am looking at it from the technology area now. I am not looking at it from the process area. There is a huge time delay. Time delay means I will prepare the document, then submit it within 21 calendar days. Then these days will take, there is an NTP period, normal transit period. So this document will reach there in NTP. Then there is a usance period. So many days are lost in this. And then the payment will occur. Okay, step number 3. But if you look at this blockchain technology, blockchain is totally different. In blockchain what happens, see, focus from the technology angle and the delay angle, time delay angle. See, there is no requirement of LC, to be frank, in this case. Importer wants to do the business, exporter wants to do the business. Okay. He will go to his bank. In fact, after few years, this bank will also be not needed. These two banks will be not needed later. But initial stage, he will go to his bank. His bank will issue this LC. And this LC, right now it is going through SWIFT. Right, this SWIFT to his advising bank. So here, all the parties will be on the blockchain. Okay. So his bank will issue the LC and this LC will reach the advising bank immediately. No delay, immediately. So this bank will check the authenticity and immediately again put a block on this, that done, checking is done. Immediately it will reach this exporter. How much time does it take? Once the LC is issued, in hardly next 3 seconds, okay, this LC reaches this guy, exporter. Here the process of LC moving takes around 10 to 12 days, this part. Now let's look at the documents part. In documents also what happens? Here in traditional what happens? This exporter prepares almost 5-6 documents. This invoice, insurance, bill of lading, bill of exchange, packing list, certificate of origin. All these 6 documents he'll prepare. Kindly follow my LC lecture on the same channel, same series. Kindly follow the LC transaction. I have covered everything in detail. Okay. So I won't be going into it now. Here we are focusing on time delay. So these 6 documents, for preparing itself, they take around 7 days. Then the customer submits this to his bank in 21 calendar days maximum. Here, nothing. This exporter will go to the insurance company. Go means what? He will not even go. He will just put it in the blockchain. I want to get the insurance. Insurance company will immediately, this insurance, like this inspection company, there will be an insurance company. It will immediately give the insurance. This insurance, now pay attention. This insurance, okay, I'll write it over here. Let's say this is another insurance company, insurance. Okay. So this insurance company will issue the insurance. And this insurance, once it is issued, it will be immediately circulated among all the members. So because of this, what happens? Even this issuing bank comes to know right now that insurance is issued. Here, it is taking 21 days from here, then NTP, this documents move from this negotiating bank to the issuing bank. That is called as NTP, 25 days. Where are the days? 21 days gone, 25 days gone. Then this bank takes 5 banking days to check. Here, that is also gone. Immediately, this importer's bank, immediately issuing bank comes to know that insurance is right or wrong. Immediately, in hardly 1 or 2 minutes, it can give the approval. Okay, done. So such is the speed of international trade in using blockchain. There is no time delay. No time delay. That is the important part in blockchain technology. Kindly have a look at this. Okay. It is all connected in blockchain. It is all connected to a single block system. Okay. Everyone logs on to that block system and everyone comes to know what is happening where. These are the 6 documents. See this. Invoice, insurance, bill of lading, bill of exchange, packing list, CO. Minimum 6 documents. You can ask for many others as such. Okay. Next. What are the benefits of blockchain or technology basically? See, your main focus will be AI and blockchain in exam. Okay. In your portion also you are having blockchain technology. You check your book, it's blockchain. So enhanced security, see, a blockchain is very, very, very secured. Very secure. Okay. Enhanced technology, transparency, very clear, transparent, crystal clear. You cannot make any changes in blockchain technology. Once anything is time stamped, nothing can happen. See, do you know what is blockchain? How does it work? Let me show you. See this, blockchain works on BBAA system. What is BBAA system? First is block, then broadcast, then authorize, and then add. These are the 4 steps. Anything new comes in, first block this. Pakad ke rakho. Then broadcast. Broadcast means what? Tell to each element. All these elements. See, broadcast means what? Here, if a new insurance document comes, see, this example will help you better. New insurance document comes. Immediately it will be broadcasted to importer, exporter, exporter's bank, issuing bank. All the parties will come to know. So that is known as broadcast. Okay? Broadcast. Then authorize. Authorize means the insurance company will put a stamp that yes, I have authorized this. Immediately issuing bank will make the checking. that yes, it is okay as per my LC. Immediately payment will be done. And add. Once everything is authorized, you will be adding it in the blockchain. Once it is added, it means it is time stamped. Time stamp means it cannot be changed at all ever in life. So that is the transparency. That's why I said it is crystal clear. Immutability. Immutability means cannot be changed. Once anything is time stamped, it can never ever be changed. It can never ever be changed. Kindly note this. That's why everyone is going for blockchain technology. More efficiency, reduce cost. Okay, so these are the main advantages of blockchain. Okay, now we'll move on to some other questions. Some questions related to BFM. Okay, because technology you are having very few questions. So let's move on. Which of the following statements is or are correct regarding the loan review officers? Loan review officers, okay? Loan review. Who does the review of the loan? Now, one more point about this. See this earlier question. This credit risk assessment is done biannually, but some of you might think that do we mean to say that the credit rating has to be done biannually? No. That is different. This is credit risk assessment, means assessment of the loans. But ratings are done generally monthly nowadays. The CIBIL is given monthly. Okay. And in some cases quarterly for big companies. Okay. So that is different than this. Okay. So which of the following statements are correct regarding loan review officers? He can be a fresher without any expert knowledge on credit appraisal. Fresher. He should be well versed. Now see this word he, actually feel he or she. Okay, it should be he or she, isn't it? So he or she can be fresher. He or she can be should also be well versed in the relevant laws, regulations that affect lending activities. Independence of loan review officer should be ensured. So which one of them is correct? He or she should be a fresher. Can you put any fresher? Go and do the loan review. What is loan review officer? Loan review officer means basically you are reviewing not the customers, you are reviewing your process. It's an audit of the system process. You are not auditing the customers over there. Loan customers, you are auditing the systems. So can anyone be the fresher? No. Okay, so this is out. Well versed with the relevant laws and regulations that affect the lending activities. That is correct. Experienced person. Independence should be ensured. Independence of loan review officer should be ensured. So it is, obviously it should be ensured, isn't it? So answer is B and C. B and C. Got it? The crystallization of contingent liabilities and inability to undertake profitable business opportunities when available is called as funding risk, time risk, call risk, and liquidation risk. Crystallization of contingent liabilities. Crystallization means what? You have issued a guarantee. Guarantee is issued by you. Now that guarantee, when it is issued by you, okay, this guarantee comes for payment. That's called as crystallization. That guarantee comes for payment. So in that case, what do we do? That is known as crystallization. Now this means that whenever such thing happens, then this is called as which risk? Funding, time, call, or liquidation. Now what is call risk? I'll specifically speak about call risk because funding already I have spoken, time risk I have spoken, liquidation told you. Call risk I have given you the idea that whenever the issuer calls back the bonds, okay, that is called as call risk. Same thing happens with LCs. calls back. Here you are calling back for payment. So that is called as call risk. Here, whenever anything comes for payment, whenever, suppose if I issue you the bond and I call them back for payment. So what am I doing? I am guaranteeing you that you give me that bond, I'll give you that payment. What are you doing in crystallization of guarantees? I am telling you that you give me that guarantee either because of your non-performance of that client and I'll give you the payment. Isn't it? Call risk. So, contingent liabilities, crystallization of contingent liabilities and inability to undertake the profitable business is called as call risk. Okay? Which of the following are issued for a tenure less than 91 days to meet the temporary cash requirement of the government? 91 days. Commercial paper, cash management bills, treasury bills and CDs, certificate of deposit, which are issued for less than 91 days. It is less than 91. So these are CMBs. Kindly note, there are three different classifications. Okay. Number one, less than 91. Okay, 91 to 364, 91 to 364 and beyond 364. Okay, less than 91 is called as CMBs, cash management bill. Okay, CMBs. 91 to 364 is called as T-bills. Greater than 364 is called as bonds. Okay, generally, or these are called as dated securities. Dated, okay, securities. So CMBs are for short-term funding nature, very short-term. Okay, that is CMBs. Got it? ABC Limited has risk-weighted assets. If the credit and operational risks 500 crores, market risk is 200 crores, paid up capital is 100 crores, free reserve is 200 crores, PNCP, perpetual non-cumulative preference share is 300 crores, provisions for contingencies is 100 crores, revaluation reserves are 200 crores, subordinate debts are 100 crores. Calculate the total capital of this ABC Limited. Okay, calculate the approximate capital of ABC Limited. Now, capital includes what? You want only capital. You don't want anything else. Only capital. Capital includes what? Capital equals to T1 plus T2. Tier 1 plus Tier 2. Okay. Tier 1 means what? It's called as free reserves. What is free reserve? Going concern. Free reserve means what? This. Where you don't have to pay any interest. Okay. So, you want only capital, no? Tier 1 capital. You don't want any CRAR, you don't want any RWA, nothing. You want only capital. Very simple problem. What is the part of tier 1? Firstly, tier 1 part is firstly paid up capital, paid up. Then second, free reserves, we call it R&S, reserves and surplus. Okay. Then PNCP, now PNCP is there. There are others as well. Paid up, free reserves, net profit. Okay, and revaluation reserves. Are they given? Yeah, revaluation reserves are given. So paid up, R&S, revaluation reserves. These are a part of CET1, reval reserves. Okay, revaluation reserves. And last one is net profit, but that is not given over here. Is it given anywhere? No, not given. So take only these three. These are the part of CET1. After this, after CET1, you have PNCP, means 81, additional tier 1. So 81 is additional tier 1. So that is PNCP. Where is it? Is it given? PNCP? Yeah, it is. Perpetual non-cumulative preference shares. So that is given. Then what? Anything else? IPDI given anywhere? Innovative perpetual debt instruments? No. Right? In tier 1 you have only PNCP. So add this. Paid up capital is what? Paid up. What is it given? Paid up capital 100. Free reserves is 200. So 100 plus 200. Okay. Then what? Revaluation reserve. These are taken at 55% discount. So these will be taken at 45%. So what is the 45% for this? See this. Let's calculate this. Let's do this 100. Paid up is, let me remove all these things. Let me directly write it. See this. Tier 1. It is 100. 100. Then free reserves 200. Then revaluation reserves. This I'll mark it separate over here. 200 into 45%. 200 into 45%. We are taking it at 55% discount. So that is 90 crores. Okay. So 90 CR is my revaluation reserves. RR I'll write it. RR. So 3 are done. So what is the total of CET1? 100 plus 200 plus 90. So 390. So CET1 is CET 290, 390, no? 2 plus 1, 3, 390. 390. CET1 is 390. Okay? CET1 is 390. Got it? Then PNCP. PNCP is what? 300. So 390 plus 300. Take it as it is. So it is 690. So your tier 1 capital becomes here 690. T1. T1 equals to 690. Now T2. In T2, T2 is a paid capital. So what do you have in T2? Provisions for contingencies. This. Preference shares. No, this is gone. So this is gone. Then what? This market risk and everything, this is of no use to you right now because these are used in RWA calculations. Here we are not asked RWA. Okay, we are only asked capital. So, where is it? Provisions for contingencies, 100. Contingencies plus what? Contingencies, then revaluation reserve gone, subordinate debt. Subordinate debt. Okay. So these. What are provisions for contingencies given? 100 crores. So 100. 100. Plus subordinate debt is, what is this? Debt 100. Okay. There is a catch. Let's see. Is this answer right, everyone? Isn't it? Is this right answer? There is a problem in this. What is this? See this. Provisions for contingencies. There are the rules for this. The rule for this is this. When I said for calculating RWA, the rule is 1.25% of RWA or given figure, whichever is less. 1.25% of RWA or given figure, whichever is less. I'll write it over here. Let me bring in a new slide if it's there. Hold on. Yeah, there is a new slide. See this. So, this is an important term in tier 2. Provisions for contingencies. Contingencies. So, that is equal to 1.25% of 1.25% of RWA or given figure, whichever is less. Here, given figure is 100 or 1.25% of RWA. So which is that? Now what is RWA? RWAs are of 3 types. RWA, credit plus market plus ops. These are the 3 types of RWAs, right? Credit plus market plus ops. So what is an RWA given? Here in has risk-weighted assets of 500 crores and market risk of 200 crores. It's given over here. Already they have given the RWA. I thought have they given this what? Capital charge? No, they have given directly RWA. So 500 and 200. Okay, 500 and 200. So this is directly they have given the RWA. So add these. So it is credit plus market plus ops. See here. Credit and ops together is 500 and market together is 200. Single market is 200. So 5 plus 2 700. So that is equal to 700 CR. But 1.25% of 700. So what is the answer? 1.25. It's very less. Okay, 1.25% of 700. What is the answer? Do it. Let me also try it. Everyone, 1.25% of 700. What is the answer? (1.25 upon 100) into what? 700. 700. So it's very less. 8.75 crores. Right? So it is 8.75 crores. So this into 1.25%. So it's equals to 8.75 CR. Whichever is less now, this and this, whichever is less. So your answer will be 8.75. So in this figure, say this, instead of this 100, you will take it 8.75. Okay? So what is the answer then? Tier 2 capital. 100 plus 8.75. So that is equal to 108.75. 108.75. So this is over. Yeah. So the total capital of this ABC Limited, total capital of ABC Limited is 690 plus 108.75. Now add this. 690 plus 108.75. So it is 798.75. Okay. So answer is 798.75. Okay. 798.75. This is my total. So this is the answer. And this was a case study. Now remember, this case study you will get it many times, almost in every exam you will get it. And that's why I took this very important case study. Because what happens, otherwise this technology part has very few questions, theory questions. These are important 5-mark case studies. Okay. So now before going, let me cover this. Let me show you the batches. See, go to Address 24/7. The new batches have just now started. Join them itself. Okay. First, you join the map. You see this, look at this. Go to JAIIB and CAIIB. Click on CIB December. Okay. You'll see the Mahapack, CIB Mahapack 2.0, Increment Mahapack, then Increment Pro Batch. Join this Increment Pro Batch, English one. Here you will be getting the ebooks plus mock tests plus live classes plus recorded sessions. So these ebooks and mock tests are to the level of chapter wise, 4 chapters. Huge, isn't it? But what get it? For getting this, click on buy now, put the code Y432. Y432. Click on enter. 80% discount plus 1% extra. 81% discount. Don't miss this. Okay? Huge batch because in detail everything is covered. Numericals, objective questions, case studies, everything. Join the lesson. You can join the Mahapack also. In Mahapack, you are getting 15 plus batches per subject. See this. See the CIB Increment Mahapack. 15 plus batches per subject. Plus you are getting ebooks, physical books, double validity. You buy for 8 months, you get it for 24 months. But code is Y432 and always